Oh boy, Monday, or I should say happy Monday, is actually starting out once again. Very choppy, but getting a lot of green. Happy Monday for the third time now in today's video. Hopefully everyone had a great, phenomenal weekend. And this week is going to be jam-packed with economical data. I'm going to be making probably a couple SoFi videos. This is a SoFi exclusive video, SoFi watchers. And today, I, myself, as a SoFi long-term investor, I am a SoFi watcher. And we got a lot of stuff to really talk about that is primarily affecting SoFi, let alone the pretty much monetary aspect of our economy here in the U.S., and I'm going to be talking about other various things in today's episode. So if you are new, welcome. I put out videos Monday through Friday on this YouTube channel. This channel is relatively new. I did make a realistical SoFi price target video on Friday, 2 days ago. Definitely check it out if you haven't done so. It is a realistical video. It's not a pumper type of a video. I'm not here to pump a stock. I'm a long-term investor of SoFi. I'm also very much long many other stocks as well. And I'm also doing a public profile challenge, which probably get to momentarily in today's video. But if you enjoy my content, definitely subscribe. This YouTube channel is still relatively new. Let's get this channel definitely over 1,000 subscribers. My main YouTube channel has 200,000 plus subscribers, Nightmare RH. It's a video game related channel, and my video gaming viewers, they want nothing to do with the stock market. Why? Because it's very unpopular right now to actually be buying stocks, which is the wrong mentality. That's not how you make life-changing money. I've been in the market now for over 6 years, and I've made life-changing money by literally buying stocks when nobody wants to own stocks. That is the core principle of building positions when there's so much scary geopolitical stuff. Now, here's the core principle that you have to remember. I'm not a financial advisor, but you can look back at all the very OG investors, traders out there. Warren Buffett, obviously a name that probably stands out for people that aren't even in the stock market. When you have the entire market really going down because of geopolitical events, well, it's basic common sense. When the geopolitical events go away, the stock market goes up. That's pretty much the start of my journey into the stock market during Rona. 2020, 21 made life-changing money because I got into the market when nobody wanted to really be buying stock. I mean, obviously 21 stuff was just going parabolical, but there were people that let the Rona dip go by. There were also people that let the soaring 2021 crazy amount of money, greed that was happening pretty much went by too. 2022, great buying opportunity. 2024, classic example. Nobody wanted to buy stocks before the presidential election. I was buying stocks left and right. And then the presidential election happened. I was selling stocks. Nobody really wanted to go all in, which I use that term very carefully. Liberation Day, I went all in. I depleted all my cash reserves, and it was friggin' scary. But I was buying AMD below $100, Palantir in the 90s, 80s, friggin' high 70s. And it really goes to show you. So today is kind of really a little bit of a green, very much recovery a little bit. Obviously, there is so much back and forth with the nonsense in the Middle East. People are just over it. I myself am over it. We just want this stuff to really clear up. And a lot of people are fearful that it's going to just turn into an endless BS conflict. Like, I mean, the last several wars pretty much have happened in America. And the mainstream media is just not going to report on it anymore, because that's essentially what happens. Like, we were in Afghanistan for 20 years. I myself, I have a military background. I'm a USMC Afghan vet. I love my country, but by all means, I'm not a warmonger, and we really do need peace in the Middle East and also peace in the world. And I myself, among many, many other veterans, are just utterly sick and tired of just seeing constant conflicts. Um, I remember 2014, pretty much like the main bulk of like Operation Enduring Freedom was over in Afghanistan, and that was nonsense because there was plenty of still fighting happening. Plenty. My last military deployment, Afghan deployment, was 2019, and there was plenty of stuff going on. So the whole thing about it is that if the mainstream media just doesn't want to cover something anymore, then they just push it aside. And a lot of people are fearful that this is going to happen. To be honest, I'm a little fearful too. I want everything to be wrapped up and everything to be hunky-dory. So, pretty much there have been a lot of military strikes back and forth. I ended up watching a bunch of videos this morning on Fox News, CNN, a couple other areas as well too. And it seems that now, okay, so over the weekend there were military strikes back and forth all over the place. Now it's like, okay, ceasefire. Ironically, the friggin' market is open. A lot of this stuff is happening over the weekend, but like, so the market is fairly green right now because we are essentially getting that, hey, the fighting is kind of really calmed down. What do I personally think that happened? I think probably Donald Trump made some phone calls and maybe said, hey, you got to stop. My stock market is kind of I don't know if he actually said that or not. Would be funny if he did, but I mean, hey, like, it's the honest truth is that SoFi is green right now, where as a SoFi watcher, staying above $16 is really going to be a very big thing for this week, okay? If we break $16, if we go below 16 bucks, anticipate 15.50, anticipate 15 bucks. If we get below 15.50, I'm probably going to buy some more shares. I got so much bonus shares of SoFi, it's not even funny. And it's just like craziness right now, right? Oil is definitely below 100 bucks. It's below 95. It's not below 90. We got to get oil below friggin', I'm on the 5-minute chart over here. Hold on one second. On the daily chart, we got to get oil very much at 85 or lower. So the Federal Reserve has stated that at $85 or lower, oil is not really going to tick up inflationary markets on government data as much as if it was obviously, $100 or something higher. So if we can get to where we were last Friday, the 29th, actually that is friggin' almost 2 weeks ago. If we can get at 87, then we're going to see SoFi do a reeval. And SoFi was on its way to friggin' the low 20s. There obviously was conflicts in the last week. That's what halted the SoFi rally. So if these conflicts go away and oil gradually comes back down, you're going to see stocks, let alone the entire market, very much push higher. The problem is pretty much with the overall major indexes are being propped up by just AI build out. That's the reality. But you're going to see speculative names like SoFi, very much small cap companies, they're going to be going on runs. And yeah, I mean, if oil gets pushed down, SoFi bros, SoFi sisters out there, we're going to have a pretty nice move to the upside. Very nice move to the upside. So pretty much this week is jammed packed with government data. A lot of government data that can easily sway this market, okay? Government data on Wednesday is going to be huge. CPI, obviously 4.2%, is very much ticking up. Do I believe that? Okay, firstly and foremost, do I believe that we're going to be getting rate hikes this year? I personally don't believe that. The reason being is because when oil does get down lower, all this stuff is going to very much subside. And the Federal Reserve, I'm not a fan of the Federal Reserve, but they've been around the block obviously longer than me, obviously longer than you all watching. I'm pretty sure I don't have anyone that is watching me that was born 1917. I believe the Federal Reserve started in 1918. Don't quote me on that. But yeah, I'm pretty sure I don't have someone watching me that's friggin' 105, 6 years old. Obviously, the Federal Reserve does not want a repeat of the 1970s. Raise interest rates, lower interest rates, raise interest rates, lower interest rates, raise low, like it was a fucking mess back then, okay? Talking to my family, talking to my parents, very, very, very much people older than me. I'm about to be 38 in 2 weeks. Talking to people twice my age, they remember that shabacle. And it's one of the reasons why President Ronald Reagan won on a friggin' landslide. So the thing about it is that the Federal Reserve has stated unless inflation really gets to 5% or higher, it's not really going to cause the Fed to raise rates. Now, not next week. Yes, next week, next Wednesday. Next Wednesday, Kevin Walsh. I'm actually going to have a fresh haircut that day. Actually, wait a second. Oh, shit, man. I think my haircut is literally at 2 p.m. when the Fed governor is going to be talking. Crap-a-rooney, man. It is. Yeah. Okay, well, I'll be getting a fresh haircut during that time frame. But I'll be talking about it the next day, and I'll be making a morning video as well. So I believe the Fed governor is going to come out next Wednesday and pretty much squash all rate hike fears. I believe the Fed governor is going to say, hey, look, we're holding rates, but we are not raising rates. This is ridiculous. As long as stuff clears up in the Middle East, and he's probably going to say this, as long as stuff clears up in the Middle East, we're not going to have a need to really push like rates higher. So that is going to be very bullish for the market by squashing rate hike fears. What can happen to SoFi? SoFi can be on a recovery back to obviously 17. We can then be on a recovery very much past 1981 is where we were at last or Friday, almost 10 days ago-ish. Trading days, that is. Actually, no, not trading days. Friggin' actual days. But we will break into the $20 range easily. And if we get a signal of rate cuts, even if we get one, then SoFi's evaluation is going to move higher. And now we're talking about 25 plus. And if we get multiple rate cuts and everything is hunky-dory in the Middle East, oil is very much to the lower side, we go on a rate cut cycle. Now we're going to be getting SoFi above $30 and soaring to new all-time highs. That is the story of SoFi. If you're a shareholder of SoFi, or if you're new to my videos, I tell it how it is because that's how you make money in the market. You make money in the market by doing your due diligence and understanding how this stuff works. Once again, if you are new here, welcome. I'm doing a public account profile challenge. This account challenge started 2 January this year, and it's 17 months to 6 figs. We are this public profile is fighting. It's having a battle to maintain $50,000. I'll definitely say that. If you go back to my videos about 3 months ago, this profile was at its low of about 34, 33, I believe, and then just boom, baby. in a blink of an eye, you're talking about AMD took off running. This profile is easily going to be in the 60,000s when SoFi takes off running. On my private account, I own 1,642 shares of SoFi, massive position. I am a raging SoFi bull, but I'm also a realistical SoFi bull. I'm not going to be here and say something unrealistical because that's how you lose money. 2023 was a ass kicking for me. Out of my 6 years of being in the market, that was the 1 year that I was not profitable. I had more losses than I had profits, okay? 2024, I came out of the red. If you're going to be in the market for, like, essentially the rest of your life, like I'm going to be in the market for the rest of my life, I have no reason not to. My life has just gone up drastically because of the U.S. stock market, and there's no reason not to be in the friggin' market unless you don't like stocks. Then you gotta find what you are passionate in life about. If you're passionate about real estate, hey, do real estate. If you're passionate about cars, like not buying cars to, look cool, about investing in cars. I actually do have one friend that actually invests in cars, very much collectibles. Then you do what you do. But all throughout my 20s, I just literally just built cash in a savings, in a checkings. I didn't do anything for myself. Imagine if I had invested all that capital into stocks that I'm in now. Crazy, right? So the point of this is that when you are a longtime shareholder and you just have so much noise happening, I did talk about this in the previous video I uploaded too. You got many different options that you can do. The option that I'm really doing is I'm looking at evaluation and I'm saying, hey, if SoFi gets into the low $15 once again, I'll pull the trigger and I'll be buying shares. Okay? For whatever reason, if AMD were to go for me, because I got so many AMD shares. I got so many AMD shares on this profile. I got so many AMD shares on my private account. I do own the same amount of stocks on two profiles. I do get asked that question. Very consistent investor and trader. And the thing about it is with AMD, if AMD were to, for whatever reason, let's say, because there was some scare about AMD very much breaking some levels here. AMD obviously had very much some jitteries here, down to 460. AMD, if we break, honestly, into the threes, for whatever reason, if we get to the 50-day moving average of $363, it's a temptation for me personally to buy shares, because AMD, I don't worry. If you're an AMD share, first of all, if you're an AMD bull, I'm an AMD bull too. But I will be making exclusive AMD videos just on it. But yeah, AMD has so much stuff looking in the future for them. Getting back to what I really wanted to finish this video on is really major indexes. So the major indexes, we're basically seeing very much a slight pullback. And one of the reasons why is pretty much we had a V-shaped recovery since March. But the thing about it is the V-shaped recovery since March has been led because of the AI build-out. It has not been led, water cheers, by the way. 95 degrees for me today. Whoo, boy, it's a hot one. Getting a nice, yesterday was my track running day. It was getting a nice tan going. The V-shaped recovery was all the capex spending. Okay, you got the biggest companies in the world spending so much money, but look at small caps, small stocks. Small stocks are very much hurting. Remember that the S&P 500 is made up of the biggest companies in the world. Same thing with the Qs, the NASDAQ 100. So when you have all the big companies spending so much money, then you also have all the big companies receiving that money as well too. It's going to cause the entire market to very much rally. The problem is that the smaller companies, they're very much flat. And I can show you companies after companies after companies. Then we can dive into software companies as well too. They're very much down and flat. What will happen though when all those companies start to rally? Well, we can have two things. We can have a rip of a summer where we experience the same thing last summer, where we go on a extreme rally, and then very much we have some hurdles in the end of this year, or maybe we honestly have a correction this summer and we actually do very much go, we have somewhat, honestly, it will be a very decent sized correction. The correction primarily is more than likely going to be in big names, very big stocks that have definitely ran up, but that is just going to be very hard, because it's going to be hard to get a stock like AMD down when there's so much hype around it and the money is very much there. It's not like AMD doesn't have money coming in. They have a lot of money coming in, so does Nvidia. So this summer is going to be really a coin toss, but moving forward as a SoFi investor, I'm very much just looking for opportunities to add shares. That's what I'm doing personally. If you are looking to trade SoFi from a trader's point of view, I mean, friggin', you're buying SoFi at a very cheap evaluation. It's a great fintech company, which means half of their revenue is fee-based, technology-based. Then you also have the other half, which is lending, banking. So when there is a lot of fears being taken away of monetary policy, that stock is going to go on a very, very much nice rally. The evaluation is going to change to a very much higher multiple. So as a trader's perspective, you can very look at SoFi and say, hey, it's an opportunity. But then again, you as a trader have to come up with your own strategy. My strategy is very different. I'm looking at SoFi in the next decade because the management team has very much outlined a lot of big things and is throwing around the T word, the trill word. Do I think SoFi is going to be $1 trillion in the next decade? Realistically, probably not. But then again, I've been wronged, like in a good way, very much so. So anything can happen. In conclusion, if you enjoyed today's episode, definitely smash the like button, like I said. New video tomorrow, so stay tuned for that on glorious Happy Tuesday. And I'll see you all later. Bye.